Hello, everybody. How are you doing? It's amazing to me that I don't know, a week later from the last time I did one of these, I could be doing so much worse. How that's even possible, I don't know, but it is. I don't even know what I'm down since the last YouTube. 25%. I'm down 50% for the year, 50% in the last 4 weeks. I think I was down 40% when we did the last YouTube, or 37% or something. It's a disaster. And it's unfortunately happened to me many times in the past. So I just have to manage the portfolio. The magnet chip call spreads are now a tiny portion of my portfolio. They've shrunk as the stock's gone down. So I can't lose much more money there. Magnet chip common is obviously smaller as it goes towards zero. I'm still gigantic in SHLX. I haven't touched that because I don't look at that as a risky position. And today I bought a substantial amount of Kohls. Why I did that? I just like to lose money, I guess. But I put on a 15% common position in Kohls. I had a 3% position into today. I actually had a 1.5% position, and I doubled it at the close yesterday to 3%. That was pretty stupid. I also put on some call spreads in Kohls. January 23 and January 24, 40, 45 call spreads. I paid 75 cents for the 75 cents for the Jan 23s and $1 for the Jan 24s. So what's the deal with Kohl's? What am I doing here? Why am I buying it now after it just broke? I think that they are setting themselves up for a sale still, and I think it's going to happen sooner than later. But I will say that the mitigating factor is obviously the overall market and financing. Let's try to unpack what's going on today and what's happening. So Kohl's put out press release saying that the deal broke, and they blamed financing and a lack of committed financing from FRG. And in their 8K, they claims they put out a detailed background section of the process, but the last 3 weeks are basically just 2 lines. And it basically says that FRG came back earlier this week and lowered their bid to 53 from 60, and it still didn't have committed financing, they claim. And the board met 2 days later and terminated discussions. FRG put out a press release praising the board of Kohl's, management and the board of Kohl's, saying that they will continue to look for acquisitions, and they thank their financing partners. FRG today is down 7.5%, and Kohl's is down 18%. Kohl's also said that they will have a high single-digit decline in same-store sales, which is worse than the low single-digit that people expected. So they're going to have crappy earnings. I don't even know where to begin here. Basically, Kohl's today is a I'm pulling this up. Hold on one second. $3.75 billion market cap, and they were going to be sold for, nearly $8 billion a few weeks ago. There's a $500 million accelerated repurchase that's going to kick in as soon as they report earnings, which alone at these prices would retire, 12% of the shares outstanding. If they bought back 12% of the shares outstanding at $30, and the previous bid, the most recent previous bid was $53, that $23 they're saving on 12% of the shares outstanding is hundreds of millions of dollars. That all accrues to the current shareholders. You could basically look at it this way. They're spending $500 million. and they're paying 30. And if it's worth 53, then that 500 million is worth like 900 million. I'm just using ballpark numbers. And that means they create 400 million in value today, versus that $53 bid. Put another way, a share, this is important. A buyer can pay 53 after that repurchase is completed, and their entire price will be $400 million less than it was yesterday. So I'll repeat that. So if Kohl's completes the 500 million accelerated repurchase, and they then sell themselves for 53, the buyer of the company at 53 is paying $400 million less than they were before they did the share repurchase. They actually have a $3 billion share repurchase outstanding, and they could, in theory, retire $1 billion worth of stock by the end of the year. If they did that, then again, the buyer is probably saving $800 or $900 million at 53. Now, mind you, this is a company that had a $60 bid in the middle of, it was already in the middle of hell. Hell just got warmer. And it had multiple bids in the high 60s and 70 from many other parties before the financing markets. And I mean, the consumer just went to shit. Okay. This is what's key. FRG, if they want to do this deal, they have to do it while there's still some form of turmoil, because they can't get this deal done if markets normalize and the consumer normalizes and Kohl's is for sale again to the highest bidder, because there's other bidders that could pay more than FRG can pay, which is what was going to happen before the world fell apart. So FRG doesn't have the luxury of being nimble and waiting until 2023, let's say, and then offering $53 or $50 or whatever. If they want Kohl's, they have to buy Kohl's while it's in flux. Now, the two, of course, huge questions are, will Kohl's sell at $53? It's not entirely clear in their 8K that they were open to the $53 price. Kohl's did it, the chairman and the CEO did a CNBC interview today. And if you watch that CNBC interview, I'll show it to you here. Hold on one sec. I thought I just closed my YouTube by accident. Hold on one second. I'll show it to you here. Oh, I have to do this. Hold on one sec.
And let's talk about this other big news story. Kohl's abandoning talks to sell itself to franchise groups, saying it's in the best interest of shareholders to execute on a strategic plan.
I'm going to play it.
On a standalone basis, the retailer now planning to move ahead with an accelerated. What happened here?
Good morning, everybody. This is Pete.
Who wants to take it first? Yep. The chair or the CEO?
How about I'll take it first on process. As we released in our 8K after an extremely exhaustive process over 5 months, starting with 25 potential bidders. As you all know, we actually then entered an exclusivity with FRG at a $60 purchase price. That exclusivity then expired. We gave FRG a couple more days to try to work through that period. Ultimately, both the price offered and in our judgment, the judgment of our advisors, the unlikely ability of that transaction to close, the board unanimously voted to terminate the process.
So he says both the price offered and the unlikely ability, in our judgment, of that offer to close. There's really no reason why they had to mention that they weren't okay with the $53 price if it was their belief that it was completely a made-up offer that couldn't be financed. I think it's very likely that the board used the lower price as an excuse to get out of the process and get out of the deal. You're now looking at a stock price that's $29 versus the $53 offer. There is a huge delta between $29 and $53. Kohl's has traded 23 million shares today, which is something like 20% of its outstanding shares, and we still have 3 hours left. And I would guess that we would have another activist that shows up here. I think that the setup is very, very good. Now, is this another Bed Bath & Beyond where they're buying back a ton of stock and then they're going to go bankrupt 2 years from now? I think the businesses are very different. And if you look at Kohl's EBITDA and cash flow historically, it's been very stable. And I'm sure this is the reason why FRG and so many other buyers wanted it. Kohl's also mentions in their press release that they are going to explore some sale-leaseback possibilities, which I'm sure would not be for the amount of money that FRG was going to do it for. It might just be for select stores or maybe distribution centers. But the amount of levers that Kohl's has to create value between now and the end of the year, or now and a year from now, is just numerous, right? They are under immense pressure now to either sell the company or to get the stock way up. And I think they'll be very aggressive on the buyback, and that alone will create tremendous value. But I think ultimately what you're going to see happen is something that might be somewhat similar to what happened to Zendesk. And you see FRG stock down 7.5%. The market wanted FRG to do this, right? And the math works for FRG. So how can it play out? So, it doesn't have to happen tomorrow, but you basically need markets to stabilize. You need Kohl's board to feel pressured by maybe a new activist that they should take 53, maybe that they should take 50, that they should take fucking 47, right? I mean, you could honestly argue they should probably take anything above 45 at this point. And I think it's kind of like a free look in some ways. I don't know. I'm going to use a pretty tight stop with half the position. If it gets to new lows that hit it today, maybe like 28 next week, I might cut it in half and just let the call spreads ride. But the amount of stock that's traded today is so substantial, and by the time it's over, it will be so substantial. I just don't think that they're going to be able to get away with, sorry, we moved on. We tried really hard. I mean, can you not laugh at the irony of them saying that they did a 5-month exhaustive process? If they would have sold the company back in January, February, March, shareholders would have gotten mid to high 60s, maybe even into the 70s. It was only because they waited so long to do the process that we're now stuck in the situation we're in. So, shareholders are pissed, and there's no meeting anytime soon. So they have time. The board has time to figure it out. And, Zendesk put out the exact same press release that they were ending the process, and they got sold, 2 weeks later. So in the same financing market, right? Now, Zendesk didn't have to do a sale leaseback, and it's much less debt. So I'm not saying it's the same situation, but Kohl's also has cash flow. Well, Zendesk doesn't really have any. Cash flow kind of helps. So that's where I am with Kohl's. I thought it'd be worthwhile to jump on here and let you guys know. Any questions? There's no reason to make it long than it has to be. Not just FRG, very opportunistic for Apollo too. You mean funding the debt? I mean, the lower the price goes for Kohl's, the more interest they could pay on the debt. So you feel like they probably can make the math work. It was good BMYRT news. Not surprising, but good. The judge refused to throw out the lawsuit, We didn't know when that was going to happen, but it happened. And that's now trading at like more like $1.65, $1.70 in the gray market. Bid $1.65 kind of in the gray market. So maybe one day BMYRT will be the savior to my portfolio since I have such a huge position in that. I mean, Apollo wants this deal. You know, I don't know. I can't get in the minds of the lenders. I don't know. You know, I don't know. And Apollo opportunity will go away when markets normalize. Yeah, that's true. That's definitely true. And also whatever rates they were going to pay for the sale leaseback and the sub debt, those rates wouldn't be there either when markets normalize. So I have to think that FRG stock at 32, when it was at 42, when we signed the indication to buy it at 60, is weighing on the 30% owner of FRG. I don't think he's going to be pressured by shareholders. He owns 30% of the company. But I think he knows the playbook here. And the playbook, just like with Zendesk, it's to terminate discussions, let the stock blow up, put out preliminary sales guidance. And then now that the stock's $29, maybe you get a deal in the high 40s or something, $50 or something like that. And everybody's happy. Those Zendesk, no one was happy. But I think if this got done at $48 or $50, I think people would be happy. That's just what my gut tells me. And the amount of stock that's trading today, the people that bought today would be very happy. So that's how I look at it. Twitter is the most bizarre thing. Elon Musk fell off the face of the planet. No one has any idea where he is. He hasn't ever gone this long not tweeting. He usually, at most he's ever gone, I think, is 3 days. And even then, he usually announces that he's taking a break when he leaves. So no one has any idea where this guy is. And Twitter stock's hanging in there. I have no idea what's going on there. I don't even know if his absence from Twitter has anything to do with the Twitter deal. Very strange. Anything else? 3,500 magnet chip call spreads went off yesterday. August 1750 20 call spreads. I'm sure that person knows nothing, and it's just pure speculation. Obviously, the odds of a deal now are probably sub 25%, given everything that's going on. If I could go to Vegas and, I don't know, get some sort of four-sided die, no such thing as a four-sided die, and roll that for a $25 or $26 deal and have a 1 in 4 chance, I probably would rather do that than wait for the next 8 weeks to see if we get a deal. So 25% might even be too high. That's just in the near term. I still definitely think the company will be sold. I just don't know if it'll be sold in the next 8 weeks, the next 8 months, you know. But everybody's a seller there. So it's just a matter of time and getting it done. What does a four-sided die look like? Is it a triangle? Yeah, it's like a triangle, right? I have a hard time picturing it in my head. Triangles. I know your position sizing in, for example, MX is larger than a full Kelly bet, according to Coach. Any thoughts on sizing? I don't. Everything I've ever done with sizing is all gut, Paul. And I think that's probably one of my, I don't know, when things are going well, it's my best attribute. When things are going bad, it's my worst attribute. I try to size things based on my amount of capital I'm willing to lose, not necessarily based on the upside. Of course, it's all a risk benefit of how much I'm risking for how much I can make, and then what the odds are of me making it. But like with SHLX, for instance, I don't really see any capital risk there. So, you know, for me, the only limitation of my sizing there is, you know, just how big of balls I wake up with in the morning. With Magna Chip, so much of it was in call spreads. I had a fixed amount to lose there. So it was a huge position, but as the call spreads approach zero, I maximize my losses. And now I'm, my calm position now is like 30% or something like that. It's trading at 14 with 650 or 7 in cash. I'm not concerned about long-term capital impairment there. A four-sided die is a triangular pyramid. Well, I said triangle. Most people don't size things like I size things, or even close to sizing things like I size things. And look, I had a 50% drawdown in the last 4 weeks, and I'm down 50% year to date now. So look, when it works, it works. I lost a third of my portfolio on BMYRT, I believe. It's 35% of the whole portfolio. Now, of course, it's where it's marked in the aftermarket. A lot of that's already back. My average price I looked at BMYRT was $225. So if it's at $165 right now, I'm close to getting back on a mark-to-market basis all the losses there. But it's been a shitty few years. BMYRT was never supposed to be that big till the end, till I to sell. I was obviously going to sell probably half of it after LisoCell was approved. Ironic, since I to sell got approved too, so it would have been better. I joke that it might be better that this happened. If for some reason we do go to trial and we win 9+ interest, I never would have had the whole position on or anything close to it. And I've had 4 savings now. I have this huge position in the CVR that I can't sell or lose money with because it's stuck in some gray market that I can't get to. What is bigger? Nuts that MU is outperforming MX. Yeah, I know. I think that's pretty. Now, well, it isn't today. MU's down more than MX. Anything else? All right. No reason to do it too long. Anything else happens in my stocks? Hopefully good one of these days. I'll be back. Let's hope SHLX is right around the corner. I think the Save JetBlue thing is pretty interesting. Yeah, I haven't bought it. It seems rather likely that they're not going to get the vote for Frontier, and then I don't know how the board doesn't sign a deal with JetBlue. They're going to have to. So, and the antitrust thing seems kind of I don't know, but I'm not doing anything with it. Would you do anything different in MX right now? You mean, Punta? When? I don't know what your question is. Or is this just a bad beat with financing markets? Like, I'm not going to blame the markets. I have to own it. Oh, if I go back in time, I got fucked like 8 times with MX, right? I mean, I owned this before the Wise Road deal. Then the Wise Road deal happened. I lost money like 8 different times over the course of that year with the ARB. I mean, I had on like a sizable September 2250 25 call spread in Magna Chip, September 2021. I had that on before the merger. So when the stock was trading in the teens, I put on this, maybe it was 2250. I don't even know. Might have been 2250 actually. And it was a big position. Merger happens, call spread's like 80% of the money. And then the call spread completely unravels as the Wise Road deal blows up. I mean, the amount of mistakes that either I made or got unlucky with on Magna Chip, it's too numerous to say. I don't think that, there's no really Monday morning quarterbacking it here. They could have sold the company as recently as 2 months ago if they just were a little faster on it. We got really bad timing. Matt, have you looked into Macy's? The real estate enterprise value looks so much better case, so I can't understand. I don't know anything about Macy's. The only reason why I'm interested in this, Perry, is because it's in play and it's actively in play and their back's against the wall. I don't know the Macy's story. I'm guessing this is much cheaper. That's just my guess, but no, I haven't looked into it. Agree on safe. I wrote some at the money puts to harvest some short duration vol. What do you about AMBC? Hey, Dan, I'm not involved in AMBC anymore. That was just pure speculation too. I have no thoughts one way or another whether or not I assume they still settle before they go to trial. I don't know what the recent ruling will do to that settlement, though the stocks recovered almost all of it, which is pretty amazing. So, and it's pretty strong today. I don't have any thoughts on that. Also, you see the news that the Kohl's chairman now wanted to sell real estate to CMC. They put that, Perry, also in their press release that they're going to look into selling real estate. Their back's against the wall. They have to do something. That's why I like Kohl's here. They're way more vulnerable now than they've ever been because they fucked up so bad, right? They had all these bids in the 60s, and now the stock's $29. So, they have a lot of explaining to do, and it's going to have to be through transactions. They're going to have to come up with transactions, either extremely big stock, repurchase, or some sale leasebacks, and then using that money to repurchase, or a sale. I'm glad I got out, still off 15% though. Are you referring to Kohl's Blackstone? I'm happy you got out too. All right. Bye, everybody. Let's hope next week's better than this week, and better than last week, and better than the week before that. Maybe we'll wake up to a deal with SHLX. That'll be nice. Though, again, I don't know what we're going to get for that, but hey, I'll take any win at this point. All right, everybody, take care. Have a nice weekend. Have a nice 4th of July.